Up this afternoon, Bank of Ghana Governor warns Africa must integrate or risk fragmented growth, urgent coordinated fintech development, cross-border systems, and stronger policy alignment.
But the next frontier is not just more innovation in silos. It is the integration of systems, markets, rules, and opportunities across the continent.
We hear from the governor shortly. Meanwhile, Minister of Communications urges massive stakeholder participation in final 2026 SIM registration.
This is one of the key goals of our upcoming SIM registration exercise, which will allow for our digital lenders who are offering critical credit to SMEs to see and appreciate the creditworthiness of their customers.
We have details of that, plus Fish Solutions trims Ghana's 2026 growth forecast to 5.5% from 5.9% amid Middle East tensions. Many thanks for joining us. Let's get into the detail now. Governor of the Bank of Ghana, Dr. Johnson Esiama, has cautioned that Africa risks fragmented financial growth if countries fail to integrate their systems, stressing that the continent's future depends on aligning innovation, investment, and regulation. Speaking at the official launch of the 3i Africa Summit 2026 in Accra, he underscored the need for interoperable payment systems, trusted digital infrastructure, and deeper collaboration between policymakers, industry players, and investors to drive inclusive and sustainable fintech development.
But the next frontier is not just more innovation in silos. It is the integration of systems, markets, rules, and opportunities across the continent. It is about ensuring that progress in one market can connect meaningfully with progress in another, and that Africa's financial evolution is not pursued in fragments. Africa does not need isolated islands of excellence. It needs connected ecosystems. It needs payment systems that are interoperable, digital infrastructure that can be trusted, and regulatory approaches that are coherent.
The PFA dev.
All these can be achieved when institutions collaborate in pursuit of outcomes that are greater than any single actor can achieve alone.
Governor of the Bank of Ghana, Dr. Johnson there. Meanwhile, Minister of Communications, Digital Technology and Innovation, Samuel Nartey George, urged all stakeholders to actively participate in the upcoming SIM registration exercise to help build reliable data systems that will enable digital lenders to better assess customers' credit worthiness and expand access to finance.
This is one of the key goals of our upcoming SIM registration exercise, which will allow for our digital lenders who are offering critical credit to SMEs to see and appreciate the creditworthiness of their customers. And that's why you must all take part in the upcoming SIM registration. The next phase of our growth must be defined by the integration of our systems that communicate with one another, coherent policies, and interconnected markets. Ladies and gentlemen, distinguished governor, Ghana is committed to supporting this shift. As a government, we are advancing forward-looking regulatory frameworks that enable innovation while safeguarding customers. We are strengthening our public-private partnerships to deepen regional integration, and we are investing in digital skills and capacity to sustain growth in the sector.
You have been listening to the Minister for Communications, Digital Technology and Innovation, Samuel That's it, George. Two other stories this afternoon. Fitch Solutions has revised its 2026 economic growth forecast for Ghana downward to 5.5%, falling from a previous projection of 5.9%. The downgrade is primarily attributed to escalating geopolitical instability in the Middle East, specifically the US-Israel-Iran conflict and the effective closure of the Strait of Hormuz. Ghana's 2025 performance was its strongest since 2019, reaching an estimated 6% growth. However, the research firm Fitch Solutions warns that external shocks are beginning to cloud the near-term outlook. The conflict in the Middle East is expected to hit the Ghanaian economy through higher global energy prices. And peasant farmers sound alarm over looming tomato crisis as Burkina Faso weighs export ban. The association is calling on government to urgently support tomato farmers to help avert a potential food security crisis. The appeal follows an announcement by the government of Burkina Faso that it may impose a ban on tomato export to Ghana. The development has sent shockwaves through the sector as Burkina Faso remains a major supplier of tomatoes to Ghana. Speaking at a World Bank Civil Society Organization engagement on food security, the president of the association, Wapia Awao Adagwala, said an emergency response plan must be implemented with input from key stakeholders to ensure a sustainable and long-term solution.
The PFAC therefore urges government to provide leadership, direction, and a clear strategy to permanently address these challenges in the short, medium, and the long term. 1. In the short term, the PFAC urges government of Ghana to, as a matter of agency, extend support to tomato farmers at irrigation sites to increase their production. This should be in the form of provision of improved seeds, fertilizer and mechanization services to enhance production. The tomato farmers within the Peasant Farmers Association of Ghana are ready and available to work with government in this regard. Within this period, government should quickly set up an emergency strategic response plan together with stakeholders to address the looming shortage of tomatoes in the event that engagements with the Burkina Faso authorities prove futile. 2. In the medium term, government must establish more land banks, increase land availability for at irrigation sites, and enroll and empower additional farmers for tomato production.
President of the Peasant Farmers Association there. Let's end the bulletin on the Treasury bill market because after a robust start to the year, Government of Ghana's streak of Treasury bills over subscriptions came to a halt on Thursday, March 19, 2026. The auction saw an undersubscription of 1.27 billion cedis, a 25% gap relative to the target, following 11 consecutive weeks of exceeding its borrowing target. The latest auction saw a noticeable dip in investor appetite, marking the first undersubscription of the year. There's more in this following Business Desk report.
Government entered the auction looking to raise 5.005 billion cedis across its short-term debt instruments. However, total bids from investors reached only 3.731 billion cedis, leaving a significant gap in government's financing goal. The shift from oversubscription to undersubscription is a key indicator of changing market sentiment. Subscription rate was 74.55%. While the undersubscription rate of the auction was 25.45% of the total offers received, government opted to raise 3.266 billion cedis, approximately 87.5% of the total bids. Interest rates across all three tenors showed upward movement as the markets adjusted to higher liquidity conditions. The 91-day bill received bids amounting to 2.232 billion cedis, with government accepting 1.767 billion cedis at a yield of 4.78%. For the 182-day bill, offers totaled 667 million cedis, while government accepted 667 million cedis at an interest rate of 6.36%. The 364-day bill received bids amounting to 831 million cedis, with the government accepting 831 million cedis at a yield of 9.58%. This result signaled a potential shift in the domestic debt market, as government may need to offer more attractive rates or adjust its expenditure targets in the coming weeks to match the current investor sentiment.
That was a 3 Business News Desk report, ending Business Daily on 3FM 92.7. For more business stories, please check out our website, 3news.com. My name is Grace Hamwajiman. Thank you for joining us. Good afternoon.